Welcome to the Indicator Warehouse. In this video, I'm going to go over the Dynamic EquiVolume Bars. Dynamic EquiVolume Bars are based on the EquiVolume Bars developed by Richard Arms many years ago. What Mr. Arms did was he found a way to visually incorporate volume into the price bar itself. Volume bars, as you know, can be very difficult to interpret. They're usually displayed as a histogram, and it becomes a little bit more difficult to decipher. But what Mr. Arms did was he made the bars wider for those days that there was more volume and narrower for those days that had relatively less volume. This gives you a really quick visual interpretation of how much participation there was on any given bar. So you really don't even need to follow the volume chart anymore. With the Dynamic EquiVolume Bars from Indicator Warehouse, not only can you plot these bars on any market, regardless of whether you're trading Forex, futures, stock market, ETFs, anything really that you can plot on a NinjaTrader chart, you can also use them with a wide variety of charting styles. Normally we see these on the basic candlestick type chart. That's because candlestick charts seem to be familiar to most people. There's actually three styles of Dynamic EquiVolume Bars built into this charting software. The candlestick chart is the first one. There's also the Power Box, which is the version used by Dick Arms. And then there is what is called a modified box, where you can see by these shadowed areas whether the market was trading higher or lower, where the wick may be located, and so on. A lot of people like to just stay with the standard candlestick, as that is what's most familiar to them. Here we have the E-mini on a 60-minute chart, but perhaps you don't want to trade a 60-minute chart. Perhaps you are more of a tick chart trader. Well, the Dynamic EquiVolume Bars will even work on tick charts and a whole variety of other charts. Let me show you here. We'll go to tick charts. We'll pull up a tick chart. And we'll just go with the default 150 and apply the EquiVolume Bars. And there you have it. You can see that the bar sizes change relative to how much volume is associated with it. It looks like the volume was actually fairly steady for the most part. You can see it was declining a little bit here in some of the off session, but for the last day or so, it looks like the volume fairly steady on a lot of these tick bars. The Dynamic EquiVolume Bars will also work on range style bars. So let's say with the E-mini you have a 4-tick bar, and you can see that, oops, I've got the wrong style. Let me put the Dynamic EquiVolumes on here. There we go. That's better. So you can see with these range bars, you get a very clear indication of, a lot stronger selling going on here, a little bit of buying pressure here, the buying pressure not being supported the next few times the market comes back to this area of support. We got some resistance here, a little bit of extra selling going on, a lot more extra selling, and then even more extra selling. So a pretty clear indication that this market was actually going to decline from here. You can also use the EquiVolume Bars on, say, something like the Mean Renko Bars from Indicator Warehouse, which is a very popular, very efficient charting style. And here too, you can see that the width of the bar will tell you very plainly how much volume is associated with that particular bar. For those people who are trading the Diversified Trading Systems from Indicator Warehouse and the Raptor Trading System, the Dynamic EquiVolume Bars will work on those also. Here is a Raptor chart on crude oil, and you can see quite plainly that the bars are printing wider or narrower depending on how much volume there is associated with the chart or with that particular bar, pardon me. You can see there was a lot of selling pressure here. Market rallied up a little bit. It's not really being supported at the moment, so if we print a sell signal here, we might want to wait for a little bit more structure before we get into that. We can also look at a tool, say like the Hawk Microscalper from the Diversified Trading System. This is the Hawk Microscalper for the mini Dow for today's session, and you can see that the market opened a little bit back here, tailed off a little bit. Here's the first micro-macro cross signal, which is a very reliable signal with the Hawk Microscalper. You can see the width of these bars suggesting there's a fair amount of selling pressure going on here. That would certainly lend some confidence to taking this signal. It is in turn followed by a 4-arrow consolidation, another high probability signal. And you can see the width on these bars still fairly substantial relative to some of the average width. So the market tailed off a little bit, came back here into a macro pullback signal, and look at the selling pressure that was going on as the market got back to this familiar resistance area. So it tailed off a little bit there, certainly enough to find our profit objective. Let's take a look at the Falcon Swing Trader next, which is another part of the Diversified Trading System. This is the Falcon Swing Trader now on the Euro, or the 6E, or the Euro-US dollar pair, depending which instrument you're trading. They're all going to move more or less the same. And again, you can see it's displaying the bars relative to the volume associated with each bar. Notice here that we got a little bit of buying support off of our primary support level. This is off of our ultimate support and resistance suite. This is actually an add-on indicator. And you can see the market fell off a little bit, not a lot of support to the downside. And look at what happens when it comes back. We're generating a trend change signal. The bars are getting a little bit wider. Last attempt by the sellers to force the market lower, and then we start coming back with some rather substantially wide bars. This would give us a lot of confidence in trying to buy the euro higher on one of these signals. And in fact, the euro did have a nice little run to the upside. So you can see how the dynamic EquiVolume bars can help you confirm a signal. Let's take a look at the Eagle Trend Trader, which is the last part of the DTS trading system. This is the Eagle Trend Trader now with the dynamic EquiVolume bars. And you can see that we had actually a pretty clear indication that this rule of 3 signal, which is our counter trend signal, was going to get some traction to the downside. If not that one, certainly the with trend signal that developed a little bit later. Notice what happened here. The market made a nice little run up, came back down, started to show some support, some decent support. Every time it got up here, though, it started to fail. And then look at this crushing bar here by the bears, just sending the market lower, came back, and then the bears start beating up on the buyers again. We generate a sell signal, nice little move lower, a little retrace into the hard edge. You can see, again, some added selling support here, and then the market continues lower from there. So the dynamic EquiVolume bar is a very versatile charting style, available to use on any time frame and practically any chart style that you want to trade. And remember, whether you're day trading the E-mini S&P, other future contracts, or the Forex, Indicator Warehouse will help you get more profit from your online trading and technical analysis efforts. Thanks again for joining us.